In this video, we start to look into international politics and technology as we find out what's really going on with the dumping of US treasuries around the world. Our goal is to show the real face of US hegemony and how bad the US debt problem is and how it affects the rest of the world. The US Treasury International Capital Flows Report, which was just released, showed that at least 15 countries around the world sold US treasuries at the same time in April. This shows that a counterweight to US power is being made. China, the United Kingdom, Belgium, Switzerland, Ireland, Saudi Arabia, South Korea, the Netherlands, Australia, Spain, the Philippines, Israel, Iraq, Peru, and the Bahamas are just some of the big countries that are selling. Also, the US debt has been sold by the Cayman Islands and Bermuda. At least 17 countries that buy a lot of US debt from other countries sold some US treasuries in April. The United Kingdom is one of the US's most important friends, and it is the third largest holder of US debt. But in April, the UK sold US Treasury securities worth $304 billion, making it the biggest foreign seller during the month. Israel, which also has a lot of US Treasury bills, sold $28 billion worth of them in April. Over the past year and a half, Israel's holdings of US debt have steadily gone down, from a peak of $691 billion in December 2021 to $445 billion today. This shows how worried US allies are about the US debt problem. Even though the US Congress voted to remove limits on how much the government can borrow and to extend the debt cap to January 1, 2025. This doesn't solve the real problem. According to the US Treasury's monthly report, the fact that the government budget deficit keeps growing each month raises concerns that the risk of a debt crisis has not gone down, but rather gone up. By the end of May, the US Commonwealth had a $403 billion deficit, which was the fourth highest monthly deficit since 2023. Even though the debt ceiling extension seems to have been solved, the US deficit is expected to hit $138 trillion by September 30th. Also, the talks about the debt ceiling from January to May of this year did nothing but put off the next debt problem. As of June 21st, the overall debt of the US government was almost $32 trillion, which is equal to 121% of the country's GDP. If interest rates were high, it would cost the average US person $95,000 to pay off the national debt. Last year, the net cost of interest on the US government's debt went up by 41%. This was the biggest increase in any fiscal year since 1962. As the US Commonwealth's total debt keeps going up, its financial costs are also going up. Several Fed officials have said that the highest interest rate since the 1980s will stay in place. This will make the already low-income and heavily indebted US federal government have to pay even more money. In answer, the Fed has had to reduce its balance sheet by selling off US treasuries and other assets. Since the tapering started last June, the Fed's holdings of US treasuries have gone from a high of $5.76 trillion to a low of $5.16 trillion, which is the lowest amount since June 2021. In other words, up to $607 billion worth of US Treasury securities have been sold for less than they were worth. This makes the Fed the biggest short seller of US treasuries in the world. Fed Chairman Jerome Powell said that the Fed will stick to its plan to sell off $35 billion in mortgage-backed securities and $60 billion in US treasuries each month. Also, the latest statement says again that the banking problem is helping to lessen the effects of inflation by possibly making it harder for US households and businesses to get credit. Several US banks have failed since March, including Silicon Valley Bank, Signature Bank, and First Republic Bank. This has caused a banking problem in the US. Part of this problem can be blamed on the Fed's moves to raise and lower interest rates too quickly. Many small and medium-sized US banks that held US Treasury-related assets saw their value drop sharply and couldn't handle the rush of depositors pulling their money out, which caused a domino effect. As Fed Chair Powell and US Treasury Secretary Yellen have said many times, it is clear that the banking disaster is far from over. This banking storm is a stark reminder to the US Federal Reserve that a debt problem is coming. As a group of banks, the Federal Reserve does not only help the US economy and debt. The top US bankers who are close to the dollar printing press have been making money from the cannibalization game of the banking crisis. At the same time, they have been making money from U.S. Treasuries through a cycle of interest rate hikes and cuts that are meant to stop inflation. As the Federal Reserve sells off a lot of U.S. Treasury bonds, this plan is becoming clear to everyone. But the U.S. still needs big financial institutions around the world to keep its debt addiction going. The U.S. debt economy model can only last as long as other countries continue to put most of their foreign exchange savings into U.S. Treasuries. The fact that U.S. Treasuries are being sold off all over the world shows that countries are getting more and more worried about U.S. debt risk. Even though the U.S. has briefly put off the crisis by raising the debt ceiling and removing limits on borrowing, the real debt problem has only gotten worse. The Federal Reserve, which is the biggest short seller of U.S. Treasuries, keeps buying them by raising interest rates and making its balance sheet even smaller. This adds to the U.S. Commonwealth's already heavy debt load. The banking crisis has also shown how weak the U.S. economy is by showing how much it depends on purchases from major global monetary powers to keep its debt-based economic model going. These changes offer big problems for the U.S.'s position as the world's leader and its model of a debt-based economy. The current sell-off of U.S. Treasuries around the world shows that a balance of U.S. power is starting to form. Several countries like the UK and other big players have cut back on the amount of U.S. Treasury they own because they are worried about the U.S. debt risk. The banking crisis and the Federal Reserve's moves, like raising interest rates and shrinking its balance sheet, show how vulnerable the U.S. economy is. For a more fair and sustainable global order, it is important for people to think about U.S. influence and the changing balance of power around the world. As the world watches international relations and technology change, it is important to think carefully about what the global sell-off of U.S. Treasuries means and how it will affect the future of the world. We care about what you think and feel, so please tell us in the area below. Don't forget to click like, subscribe, and bell to stay up to date on our latest material. As we move forward, it is important to realize that the problems caused by the U.S. debt crisis and the changing nature of foreign relations and technology require a broad approach. It's not enough to just look at what individual countries or institutions do. You need a bigger picture to understand how the economic and political systems of the world are linked. The fact that U.S. Treasuries are being sold around the world shows that U.S. debt is no longer seen as a safe and stable asset. The fact that many countries, including big ones like China and the UK, are getting rid of their U.S. Treasuries shows that the U.S. debt economy model isn't working as well as it used to. It shows how worried people are about the U.S. debt levels and the possible risks that come with them. The fact that the Federal Reserve is the biggest short seller of U.S. Treasuries in the world raises important questions about its goals and how its actions affect the world's financial system. Even though the Federal Reserve says its actions are meant to stop inflation and lower risks, the effects of its plan are far-reaching. The U.S. Commonwealth is being hurt by a shrinking balance sheet and rising interest rates, which also affect the rest of the world's economy. Also, the U.S. banking problem shows how weak the U.S. economy is. The failure of banks and the possibility that more banks will fail are sharp reminders of how fragile the system is. This banking storm not only affects the U.S. economy, but it also sends shockwaves around the world. This makes people worry even more about the security of the financial system as a whole. In light of these events, it is important for lawmakers, economists, and citizens alike to think carefully about what the global sell-off of U.S. Treasuries and the bigger changes in international relations and technology mean. This means that current business models need to be rethought, and we need to move toward more sustainable and fair ways of doing things. As we end this video, we want to encourage you to do more research and talk about these issues. Your ideas and thoughts are very important to the way people talk about foreign relations, technology, and the world economy. Together, we can work toward a more fair and stable world order that puts the well-being of countries and people alike at the top of its list of priorities. Thank you for coming along with us on this interesting trip. Don't forget to click like, subscribe, and turn on the bell to stay up to date on new material. In our next videos, we can't wait to talk with you about more important issues.